headline, newsflash, Dow sinks 500 points as Britain's Brexit mess fuels investor angst. U.S. markets deepened their losses Monday as Britain's political crisis around Brexit clouded investors' outlook. British Prime Minister Theresa May delayed a key parliamentary vote on her country's exit from the European Union. Thanks.
Yeah, it turns out decisions made by the English still impact Americans.
Yes, they do. And you asked me, like, why was the vote delayed? The only reason votes are ever delayed because it wasn't going to pass.
They're not going to get what they want.
Exactly. So that's happening. So hopefully,
you might have to talk about it again tomorrow. Who knows?
What? It's oddly comforting to know that when it comes to legislative bodies dealing with the elected leaders of countries, it's not just the U.S. that can get messy now and then. All right, let's get to the first thing that we're going to talk about, and that is the recent filings of Uber and Lyft to go public. And not just that these are two companies that have routinely showed up on the lists of, pick your list, most anticipated IPOs, biggest private companies to consider going public, but they're in the same business. And I'm curious how you think about these two, because I say they're in the same business. You dig a little deeper, the way that they have set up their businesses, they appear to be going after different things.
Yeah, you kind of seem like that when you look at these companies. Uber, the biggest, the first, about 4 times the size. And if you look at employee count worldwide, but its losses in the last quarter were also 4 times as large. They reportedly lost $1 billion in the last quarter. Lyft losing about $250 million. But yeah, like you mentioned, Uber, not only is it bigger and older, but it is also trying new things. They purchased bicycle rideshare company Jump recently. They have Uber Eats, which is a massive network inside of Uber, and also partnering with Toyota, invested $500 million to start putting some Uber driverless technology into their minivans. So a little bit larger than Lyft, but I think Lyft is, it's following suit nicely. I think Uber might have had a chance to really put the nail in the coffin in Lyft, last year, but we all saw the problems that erupted within Uber: sexual harassment allegations that they stole IP from Google, and then other allegations that they were kind of skirting regulators. So I think they missed their chance because Lyft was able to raise more money. Now they might go public. They might go public before Uber, raising a significant amount to then broaden their business potentially. So while Uber has the lead in pretty much every category, I think they might have missed their opportunity to really stake their claim as number one. Yes, they do have over 60% market share in the U.S. versus roughly 30% for Lyft. But I think this is going to be an ecosystem, at least domestically, where they both coexist and can start to thrive if they're held more accountable by public shareholders, because they've been just burning cash every single quarter with only the private eye watching them.
Lyft has absolutely taken advantage of the opening that Uber gave them in the wake of the whole, Travis Kalanick debacle.
Yep.
In ways that in a completely different industry, Pizza Hut has not taken advantage of the problems at Papa John's.
Right.
So
somehow.
So kudos to Lyft for doing that. In terms of which one is going to go public first, long term, does that matter? I mean, a lot is being made in the financial media of, and I understand it if you're in the business of writing headlines, sort of the race to go public first. They're two ride-sharing companies. I get it, but I just sort of look at it and go, okay, if you put a gun to my head and ask me which one went public first, Dropbox or Box, I have no idea. I think long term it probably doesn't matter all that much, or is it something where actually in the long term it doesn't matter, but short term it actually does.
So short term it could, just based on the hype around the IPOs. Maybe people get burned out on the one that comes second if they already spend a ton of their money allocated towards ride sharing, I guess, however these portfolio managers might look at it. But I would only see this as being an advantage for the company that goes first if it came out of nowhere and the second company was caught completely flat-footed. But they're going to be IPOing in a relatively similar time frame. So, yeah, I don't think that one's going to have a necessary advantage in terms of putting that newfound capital to use in any specific way. You might have a little bit lackluster of ribbon cutting for the second one, but I don't foresee it being a big deal for investors if you're looking at a multi-year time horizon.
Have you seen anything thus far that gets you more interested in one over the other?
I as a user, I've stuck with Uber for the most part, so I guess my allegiance would be right there. But I think that Lyft has been a little bit more focused. They've kept themselves out of the negative PR circus that Uber has found itself in and has kind of gotten itself out of. But, there's still some overhang there, I think, from public perception and as well as the way that they've treated their drivers. But I think whichever company is able to create the better ecosystem for not only its users, but its drivers as well, I think that one will probably treat investors better in the long run. So right now, not necessarily a favorite. It just depends on if you want, the scale of Uber that it has, but it's not making more money. It's not, the margins aren't significantly better. So I think operationally you could go either way.
Well, to go back to something you had said earlier about the pressures of being a public company, because there are significantly more pressures for public companies than private companies. I could see that being ramped up on Uber more so than Lyft, simply by virtue, and put aside all the stuff with Kalanick, simply by virtue of the fact that they're trying so many more things. That if both these companies go public and you're you're an institutional shareholder, you're putting pressure on Lyft, it's really about operational stuff. Whereas with Uber, it's more like, hey, look, can you scale back the food delivery stuff and just focus on this? Yeah,
because they made a huge bet on driverless technology, and maybe that doesn't work out. Maybe they should have just, waited and then licensed driverless technology from a Waymo or from other companies that are out there way more excelling way more at this. So, and that's their singular focus in a lot of ways. But hopefully they can, stay on the right track, which it appears that they're starting to be.